Nothing going on. That's all right. Still turned it into a productive yap session. I'm live, YouTube, Twitter, in the flesh. We're back, baby. We're back. Missed the morning stream because I went to sleep at 4 in the morning because I did not realize that Shimaho had caffeine and I drank it until 9 p.m. So, whoops. Let's make it a productive yap session. We got about, 30, 40 minutes. Look at some charts. We'll review the weekly moves. An inside peek at the TTI scanner and stuff that's coming out. For those of you in TTI that are listening to this right now, make sure you watch the Academy that came out earlier today. We had a great one. We had chart requests live. We went through 30, 40 charts. We went through the scanner. We talked the shit. It was a lot of fun. Yeah, you like the lo-fi? The lo-fi in the background really hits. It's really great. Okay, all right. Well, first thing I noticed right when I sat down after lunch, I was going through weekly moves. And, well, you can see right here that energy should be, if it's not important to you, it should be important to you. Let's look really quick. If we go over to U.S. sectors and we look at this on a 5-day rolling basis, look at the leaders, baby. Everyone's trying to buy the bottom in tech, and I get it. It's the Leopold Brenner special. I'm telling you. I just posted something on the old tweeters. If you're not following me on Twitter, you're doing yourself a disservice. Really just some great stuff. Go for the layups. There's no trophy for nailing the best trade. You know, the Big Short has made more people lose generational wealth, at least the opportunity of accumulating it, than anything else that I can think of in the last 10 years. The fetishization of timing the top and shorting it. Just buy the fucking uptrend. Just buy the uptrend. Low-hanging fruit. There's no awards for nailing the best, or the hardest trade. There's none. The only scoreboard that matters is whether or not you're making money or you're losing money. That's how we judge whether or not we are doing the right things over time. So it doesn't matter if you buy the absolute bottom of an Ash and Brenner blow up, or if you go long a slowly upwards sloping, upwards trending energy stock. If the energy stock makes more money than trying to time the bottom, buy the goddamn energy stock. Last 5 days, energy's outperformed. Last 2 weeks, tech with a nice bounce, but no follow through. Go back quarter to date, energy is leading. So I'm not saying there's no opportunities in tech. As a matter of fact, we'll look at a couple. But I don't think it's necessarily software stuff right now. It's probably going to continue to be a lot of volatility in that particular industry group. Personally, I've not opened up any. So that means off of the Leopold blow up. Nothing. Zero. A lot of questions about it too. Why not? Because there's easier trades out there. Financials. Nobody wants to own them. I own them. People get frustrated because they don't go up 8% per day. Fuck them. I don't care. TikTok brain rot. Go somewhere else. You'll be chasing things left and right. Have fun. Not me. Buy myself a large cap bank stock going up and give it 6 months. I don't have to wake up and worry about Citadel buying the book, of a large fund that owns JP Morgan. Steady money-making opportunity, financials, energy, healthcare, right? Like these are quarter to date, obviously, but go to year to date. Energy. This is the theme of the year. It's energy. It's energy. That's where a lot of the opportunities are right now. And they continue to be there. You go out and you look at U.S. industries. Let's go ahead and Look really quick at year to date. Semis are still leading, but dramatically falling off their highs in June 22, down from 85% up, or excuse me, down to 62, but still up off their floor of 40. So again, very volatile. It's a hard trade right now. Not saying it won't work, not saying it's the end, but right now it's hard. Find the low-hanging fruit. Go find it. Energy is a good place to start. Gold miners, quarter to date, up nearly 20%. XOP up 17, but software up 15. Semis are down 11. Clean energy and solar are around there. There's a lot of correlation between all three industries. Software is up 15% quarter to date. 15% is wild. Internet's up 10%. How many people do you know, be honest, that are ranting and raving about software stocks? Not many. People are still trying to buy like the bottom on the memory stocks. People are still trying to buy like the bottom of the meme stocks because they see all their favorite FinTwit influencers making $1 trillion buying the bottom. Fuck that. Like, if you have a job, you can't sit in front of your computer 24/7 and like micromanage each position. Why are you playing in that field where you need to have that opportunity? Go. Other areas of the market right now showing you incredible opportunities. So again, we go over and we look at energy. This is a secular bull market breakout. I've yapped about it all year. I'm going to continue to yap about it probably for the next couple of years because secular bull markets don't end quickly. We're very close to an all-time high breakout. What happens? Like, do you have any exposure right now? Do you have anything here at all? What happens if the energy sector breaks out and next week we're at all-time highs? Is it the time to add then? It's a better time to add next week than maybe 1 month from now when it's even higher. And by the way, this is all against the backdrop of oil that's not going up anymore. Right? Oil stopped going up at the rate at which people expected it to go up. Where is oil here? Do I even have oil on this list? I don't. Let's go and add oil to the list. Throw this in the rocks and rates area. Now, people think that oil has to be $250 a barrel for energy to continue to go up. Are you insane? We're at $82 and energy is knocking on the door of an all-time high. This is a productive price range for oil companies. All right? Haven't you guys anybody watch Landman? Before somebody burns me, I get it. It's just a joke. Someone in the industry is going to be like, Landman's fucking bullshit. I get it. But seriously, oil does not need to be $250 a barrel for the energy sector to continue to break out. There's correlative effect here, of course. And yet, look at it. Yeah, some industry groups in here that look good. XOP, back up and over the breakout spot. Above 170, path of least resistance is higher. You don't have to like it. But XOP gives you an opportunity here to trade a higher beta area of the energy trade. So it's not like, for example, we have ET that's breaking out into decade highs. This is a slower moving name, right? Looks like we're getting it actually maybe. Closed at 2105. We're in a new decade highs by 2 pennies, folks. So we're in this, but it's slow moving. This is something that we expect to play out over the course of the next 6 months or more. Probably longer, let's be honest. It's a 1.57 ADR, relatively low volatility name. It's an oil and gas pipeline name, right? Based out of Dallas, Texas. Good old boys. Good old boys. When I leave the great country of Brazil, we are moving to Texas. I'm going to be one of them southern boys. ET, but it's not just ET, right? You look at your AMLPs. Your AMLPs are going to be generally kind of your lower volatility oil, gas, and pipeline names, right? Transport, storage, 1.24 ADR. If you don't know what I'm talking about, you can go and you can find it yourself. AMLP. Use Koifin. Use my referral link. There we go. There's my shill for the day. Look at all the beautiful names in AMLP. These are generally lower volatility names. Not all of them, but generally. AMLP is a lower volatility type of industry. A lot of these names are up quite a lot year to date. Look at this. Look at this. For energy, that's insane. But let's say you don't want slower moving stuff. That's fine. We can take a little bit further and go to OIH. We're looking at potential 8-year highs coming in, right? Little BRB setup, broke out, pulled back, bounced, heading upwards. It's 2.72% ADRs. A little bit more volatile than the AMLPs at 1 point something. So, all right, you want a little bit more juice? There you go. Oil service names. Well, you might be asking yourself, Hammy, what types of names are an OIH? I'm glad you asked. You got the infamous SLB. What is this? Schlammenbrenner. Ironically, this is not a German company. This is based out of the United States. Yeah, Baker Hughes, FTI, Halliburton, Rig, right? A little bit higher volatility than some of the AMLPs. But let's say you want even more. You can go to the XOPs. These are going to be a little bit higher volatility because they have different market caps associated with them. So again, a lot higher than AMLP at 2.42 as an industry group. You're clearing all of the volume. Right, volume matters in 2026. It just matters a lot less than what we were originally taught to look at it as, right? People usually look at volume histogram here. It's volume by time. Gives you some edge, but let's be honest, volume by time is less important nowadays due to higher frequency trading firms and all the other bullshit that comes in, particularly stuff that doesn't report here, dark pool activity, etc., but it does show up here, volume by price. So while we might not want to track volume by time, we absolutely want to track volume by price. This tells us where potential support and resistance levels are. It also gives us incredible edge at timing breakouts because once we get over the volume hump, which we are above officially at 175 to 176, we are entering something called a big blue sky environment. What does that mean? There's very little overhead supply that's potentially going to be selling into price. What does that mean for somebody in a trade targeting the uptrend? Probably a hell of a lot easier of an uptrend to hold because you don't have to fight through people that are looking to sell into strength. That's a good thing. Hammy, what types of names are in XOP? Well, I'm glad you asked. We can go and pull that up. Look at the returns on these. Look at the returns on these. 168%, 129%. These are energy names. Energy names. It's insane. Energy. Can you imagine this? That's crazy. This is an area of the market nobody wants to own because everyone's looking at the Aschenbrenner blow-up. Oh, we got a TTI meetup. Look at you fine folks. Why does Billy look younger than Tom? Billy's got that Korean fountain of youth thing going on. Good looking group. Good looking group. You guys are awesome. Hope you guys enjoyed the Shahasco. And yes, we got it. If we flip over to the TTI scanner, where we are looking at, once it loads, we'll look at established leaders, and we can filter through energy in particular. Look at the types of names that show up, the names that we were just talking about, the Valeros, the Dinos. This is a fantastic setup, by the way. Check this out. Click the Dino. Get a little bit of a chart here. Does it look good, right? We're looking back 1 year. Is it an uptrend? We want to own strength. We're looking for uptrends. Quick check. Yeah. Click it and go to trading view if you want. Track it if you want. We got the trading information here. We got the scores going on. Shows you the scan it's on. Yeah, that doesn't look bad. What's the chart look like? Now, we've already been stalking this, so if you're in TTI watching this, you know. But there you go. I mean, does it get any more simple than this from a TA standpoint? You get the breakout. Let's throw that volume back on. You get the high volume breakout above 1 RVol right here. You get the pullback. You get the bounce. We're closing at all-time highs on the weekly. I mean, this is bread and butter TA 101. This is no foo-foo-berry triangles or whatever the hell else people need to draw to make themselves feel good. We're just looking for fucking breakouts into strength, pullback into overhead resistance levels, turning into support. This is the bread and butter of technical analysis, folks. Trends and support and resistance. Does not get any easier than that. The further you get away from trend and support and resistance and simple concepts like relative strength and momentum, the dumber you're going to make your decisions will be. I mean, it's just awful. Once you start see goofballs on Twitter, like doing things like Elliott wave theory and like GAN fans and stuff, congratulations. That is the type of shit that's horoscope for men. There's no quantifiable edge. None. I've never seen an academic research paper come out to say that there's edge there. The good thing about Elliott waves is that it teaches traders that good stocks pull back occasionally. That part's good. But you're going to sit here and tell me you make a career out of being able to time every single pullback perfectly to the penny? All right, buddy. All right, buddy. Prefer to buy the breakout and uptrends, and on a perfect entry, try to buy the pullback into some sort of support level. Previous resistance. Sinclair. Good stock. Great chart to teach somebody the idea of breakouts and pullbacks. Let's go ahead and clear this really quick and then just look at the entire universe of energy-related stocks, see if anything else comes up. A lot of them. You can see that some of them are worth looking at, some of them are not. But we tend to stick with 70 and above. That's really where a lot of the opportunity comes from. So we'll get the cutoff here. Exxon, Conoco, Permian, FTI, APA, OVV, Dyno, Valero, PSX, and MPC. A lot of these are already breaking out, so there's not a whole lot of opportunity to own them here, which is why you got to do your homework. You got to be able to identify these as they're breaking out. And if you want to try to buy a pullback, set your alerts for the pullback. Arvin says Exxon looks like it wants all-time highs again, and it does. Yeah. I don't know if Exxon is going to be the best trade here. It was the best trade when we opened it here. I don't know how much more juice Exxon will have over higher beta names. It's 2.15 ADR. It's also over $500 billion. Chevron to a lesser extent. Similar setup as Exxon, but a lot more. I think structurally Exxon is probably better, but from a trading vehicle standpoint, trading view loads, Exxon's a little bit more volatile. And look at that. Exxon's a little more volatile and about almost double the size of Chevron. So this is like, if you needed a name, it's hard to go wrong with Chevron and Exxon. You know that if the energy sector is going up, Chevron and Exxon are probably going up as well. How do we know that? Well, look no further than sector weighting. You go and you look at the two strongest stocks in XLE. And I will in a sec, Josh. Give me 2 seconds. Yeah, I got you. Exxon and Chevron together, 35% of the overall ETF itself. So again, if you're looking at XLE and you're going, this looks like an uptrend I want to own, I'm not saying they're the best trades, but they're not the worst trades. If XLE is going up, there's probably a reasonable chance that Chevron and Exxon are going up. That's how sector weighting works, right? And from a capital liquidity standpoint, from a capital flow standpoint, for every dollar that goes into XLE, 20.5 pennies go into Exxon, 15 pennies go into Chevron, and it goes down. So for all of the money flowing into energy or not, get the full set of data coming in on Tuesday. There's a passive bid here on energy. As a matter of fact, we can get a general look here. This is not up to date. Koyfin does a good job, but it's not up to date. And it actually looks like money is leaving. That's not bad, by the way. What you don't want is seeing crowding and inflows, particularly around one single sector. That's when things start to unwind. So the fact that there is money leaving energy from a passive standpoint does not mean that energy cannot go up. As a matter of fact, if anything, energy is going up and flows are diverging, meaning that if all of a sudden people start going, we want energy again, in the short term, it tends to be very constructive. In the long term, it starts to introduce crowding and potential opportunities for tops. So this is not bad. What would be bad is if every sector was seeing outflows and the only thing that was seeing inflows was energy. That's when you start to get the uh-oh zone. So there we go. Got a whole slew of energy-related names. XLE looks good. XOP looks good. OIH looks good. AMLP looks good. What else did we say we wanted to look at? Software. Check out IGV. Software is outperforming semis. Above 89.5, which is previous cycle highs, seems like a pretty reasonable place to expect higher prices. Does not mean it was easy. We spent multiple weeks consolidating at 89.5. This is a weekly chart, so it's kind of underrepresenting how much craziness was going on down here. But we were having like big gap down days and then filled back up, big gap down days. So I get it. But structurally above 89.5 is the beginnings of a new trend. We're above previous cycle highs. That's how this stuff works. We're above, well, let's put this on the daily here, but above all three moving averages right now. On the weekly is even better. We're above all three moving averages right now on the daily. We're within a bullish momentum regime that started back in June, right? June 1st. Even with the incredible breakdown in software when semis started to really get going, we never closed that bullish momentum regime. We never hit oversold. And we also saw a big momentum and reacceleration in the MACD. So you have the bullish regime still on. You have reacceleration through Momo. The uptrend's there. You got all three moving averages underneath price, and the 200-day is starting to potentially slope up. That would be the last moving average we would need to slope up. And then what you want to see is blue on top of red on top of black, right? All three of those moving averages stacked. That would give it a perfect trend score. Essentially, that's what we want to see. But there's a lot of opportunity here. One thing that stands out to me is there's a lot of overhead volume here. So just yapping about that volume cliff. On the other chart, this is the exact opposite. We're running into volume. And so we would expect as it makes its way up in towards all-time highs that, it's probably not just going to be straight up. We're going to be fighting through a lot of this overhead supply that was here back half of 25. Thomas says we just turned PayPal free. So for those of you in TTI, if you're listening to this, I'm yapping, so I can't send an alert out yet, but we got a burst trade on PayPal, and it's free. Just hit a double. So make sure you sell half of the position at 100% at least in order to turn it free. Sweet. Who knows, man? Who knows? I was just reading something earlier today that PayPal is gunning for an $80 buyout. Maybe. Either way, we got a free trade on PayPal, so we can't lose on it. Okay? Sell the double. And then we were talking, here, let's go ahead and look really quick through software stocks. Folks, if there's one thing, if you're listening to me app and you're not in TTI, if there's one thing you need to learn, it's that sector and industry strength is one of the few quantifiable edges in the market. It's one of the few. Sector rotation matters. And even more so, industry rotation matters. Sector is the broad idea of what's working. Industry is the smaller, micro, more actionable idea of what's working. The thematic industry trades are huge. We just traded through a bunch of them, right? The memory trade was another one. The AI bottleneck trade was another one. Cybersecurity right now is another one. It's flying. These are thematic industry types of trades. So the idea is the hierarchy, what we do in TTI at least, is we build the broader picture first through something we call the markup blueprint. We look at it every Monday. Are we risk on? Are we risk off? What are we doing with our portfolio positioning, etc.? And then the next thing is, once we figure out, let's say, for example, we want to participate, where do we want to participate? Sectors. Which sectors are moving? Industries. Which industries are moving? And then which stocks within those industries that are within those sectors are moving? It's top down. It's how this stuff works. Software, IGV, looks really good compared to semis, particularly post blow up of Aschenbrenner. If you go and you look at what is performing the best over the last month, so take this with a grain of salt, but this does take it tries to filter out a majority of the Aschenbrenner blow up, it tries to factor in the Leopold blow up. You have Team Up, 82.5, Ring. I don't know. How many of you guys have RNG? I posted about it on Twitter too. Look at that. What the hell was going on here? Nice little stage 1 and 2, stage 2. Stage 1 and 2, stage 2. Yeah, up 36%. Who would have expected that? Blackbot Unity, right? We just talked about Unity. Unity popped up on a scan on Wednesday. I think there's an opportunity. It's kind of like a PayPal type trade where there's a... Stop yapping, PayPal is going crazy. Is there like a news piece? On Wednesday, we we found Unity on our scans, and we said there was a trade up to 48, and then above 48, there's potential for a stage 2 breakout. But in the short term, there was an opportunity to get up to the overhead supply zone, right? Overhead supply zone, you can see, I mean, it's again, bread and butter, baby. How many times do we have to get up here and test it? This is stage 1, accumulation. I say it like it's easy. It's not. I bought it here like an asshole. All right, so you can swing and miss on these. That's fine. Get back up on the horse. We had a short-term opportunity here in Unity. Be able to sell the double by 48, meaning turning the trade free. And then after you sell the short-term trade free, if it meets the requirements we need for a flow trade, we open up the flow trade using the profits from the short-term burst trade. That's what I like to do. So use the short-term within 45 DTE trade to pay for the long-term 3 to 6 month out trade. Beautiful system when it works. It works. It's a beautiful system. The whole point is we want to risk as few dollars of our account as possible while still making money in the market. It's a very simplified version of saying it, but so Unity looks like we're going to close at weekly highs. Let's see. PayPal is in talks to sell itself to a group including Stripe. So I logged into Stripe earlier this week, and the first thing I read from Stripe was 11%. I might be bullshitting. It might not be 11. 11% of global GDP flows through Stripe. I'm probably fucking that up. But it's like enough to be like, whoa, maybe it was 2%. I think 2% feels more reasonable. But like an incredible amount of money goes through Stripe. Very surprised they have not IPO'd yet. Like incredibly surprised. Did we get the we got the PayPal double, or are we gonna get the triple? So how we work these, folks, is our burst trades are, we have two styles or two types of short-term trades that we like to do. Burst trades and squeeze trades. This was a burst trade. And what we like to do is sell half at the double. So if it gets to 100%, it's a terrible looking zero. You sell half, turning the trade risk-free. We also sell half at the triple. So once it gets up to 200%, so that remains 25% of the original trade, and the last 25% we sell at the Grand Slam, which is around a 500% move. So taking profits up into strength, managing risk through strength has been, it's just been one of those things that I've traded like for over a decade now. I mean, realistically, I started doing that due to the turtle traders way back when, like 2013, 2014, when I started to really dive into their philosophy of, hey, let's not take profits arbitrarily. Let's take them at preconceived areas of the chart, etc. And the way they did it was through chandelier exit systems. The way I do it is if we're trading options through percentages, right? We don't want to close our best trades early. That's the whole point. We want to let these things go. Well, we'll see if we get the triple on stream. We got the double on stream. Do we get the triple on stream? That'd be cool. Someone, I can't pull anything up right now. Someone post the PayPal position. We'll see. Okay, what else? I also wanted to talk really quick through internet stocks. FDN. Internet stocks are also doing well. Some names on the list which would surprise you. Amazon, Meta, Cisco, ANET, Booking, Google, Salesforce, Oracle, Snow, Net, Google. So structurally, we are breaking out above the penalty box in internet stocks, but on a relative basis, they're also outperforming semis. So this is a good chart. It's not the best chart, but it's a good chart. If you're thinking of throwing some money into the ringer and tech, you can try to time the bottom in Ash and Brenner stuff, or you can buy the stuff that's breaking out to new highs. This is a new all-time high on the weekly for internet stocks. And I just showed you the types of names in here. So it's up to you. You can do whatever you want. We went through software, we went through internet, we went through energy extensively. Let's talk materials really quick. Materials are arguably going to be one of the best industry groups probably to own through the end of the year. We're seeing a lot of confluence across different industry groups. We're looking for a consolidation, fractal breakout up into new all-time highs in XLB. It's not only driven by gold miners, although gold miners have had a good couple of weeks. Right? We sold a double this week in NEM. So up this week 4% NEM. We sold a double in this, so we have a free trade in NEM. But there's also silver miners that are doing relatively well. Right? SIL back up and over previous cycle high, trying to get up there. We have a high beta position in CDE, which is a silver miner related name. But there's also not just gold and silver miners, right? You have copper miners that are up on the list. This is a secular bull market breakout that is arguably going to resolve higher. You have copper itself that you can look at through CPER once it loads. Copper pushing up into all-time highs, right? The bottleneck in my mind, while AI is the fun trade, the bottleneck for me is the commodity side of things. I think that's truly the bottleneck. Like, how much copper can we reasonably find right now, today? Chile, which is like one of the world, if not the world's largest producer of copper, is going through a recession right now, or is close to. And so their copper production is down at a time where we need it. Like, we need a lot of copper to build out this AI infrastructure stuff. So this is quite literally a bottleneck. It is. Energy as well, to a certain extent. I just read something that Elon Musk is going for natural gas because he can't find other sources. Who knows? That might be something you might want to pull up on a chart. Look for natural gas types of equity names. Is EQT one of them off the top of my head? Natural gas, baby. So here you go. Here's a chart. I was long EQT. I sold a double and I didn't make any money on it. So EQT, I would assume above, again, the penalty at 60, 75, $61 puts this thing up in towards an all-time high breakout. If you're reading the Elon Musk idea and just going, I should just put some natural gas names on a list. This is not a bad one to put on. It's very liquid on the options chain as well. So it's not a bad name to own above 61. Like I said, I sold a double, but I didn't make any money on it. Sometimes that happens. That's all right. That's okay. All good. Pharmaceuticals closing at all-time highs this week. Again, has absolutely nothing to do with Aschenbrenner stuff, and yet pharmaceuticals are doing well. We have a position in Merck, which is up 5.5% this week and closing at all-time highs. That's one of our pharma plays. Took a long-term position in Merck going out to next year. We have not sold the double yet, but it looks like we'll have an okay opportunity at some point to do so. And you can see the rest of the stuff, right? Really quick, going back to Koyfin. Little intermarket analysis here. Crude up 5.32% on the week. Got commodities. This is a good chart to throw up really quick. Everyone talks about a commodity super cycle. Shout out Jason Pers. And Against All Odds. Highly encourage you guys to read his Substack if you don't. He's all about this stuff. This certainly looks like not even the beginnings, the continuation of a super cycle in commodities. Super cycle in commodities started for me in the early 2020s. This is a continuation. We're going to continue to break out. And if you don't know what DBC is, there is the description, right? Roughly half of it is energy, but there's also agriculture through corn, wheat, soybeans, and sugar, industrial metals through copper, aluminum, and zinc, and precious metals such as gold and silver. So this basket of commodities is going up. Equally weighted NASDAQ is up 2.6%. How about that? Equally weighted NASDAQ outperforming equally weighted S&P 500. What does that tell us? It tells us that growth probably had a better week than value. And that's not a bad thing for most people on FinTwit because they would prefer to own growth. Higher beta stuff, that makes sense. But it's not the stuff that you would expect because when we go down and we look at the growth ETF, IVW, it's down on the week. So while we have broadening out within the NASDAQ, it's not necessarily concentrated at the top. R2K, good week, up 1%. We're supposed to be in a seasonally weak period for small caps and micro caps, and yet they continue to do reasonably well. As a matter of fact, last week we closed at all-time highs. This week we're going to close at all-time highs again. So another good week for the Russell 2000. We have small cap or micro caps, closing at all-time highs. For those of you, if you're watching this, you're not a doomer because doomers already block me. If you're a doomer, take a fucking hike. I'm not your boy. Also, if you're a commie, but that's for a different time. Micro caps and small caps both closing at all-time highs. Mid caps closing at all-time highs. Large caps closing at all-time highs. You got the Dow closing at not all-time highs. You got, let's use IYT. It's a better vector in my opinion. IYT, not all-time highs, but a good week. What else do we want to look at? I guess we could just look at semis. Good week, but not all-time highs. So of the, 8 or 9 charts I just went through, 6 or 7 of them are at or close to all-time highs. This is a bull market, right? We know that. So if you can get out of the narrative that the world is going to fucking end every day, you probably make a lot of money. Equally weighted S&P 500 closing at all-time highs. Equally weighted NASDAQ outperforming. Equally weighted S&P and closing at all-time highs. Randy threw out equal weight software and services is less than 3% away from all-time highs. Look at that. So while IGV doesn't look bad, by the way, but while IGV is underperforming over the last couple of quarters, equally weighted is not. So it's just the big boys at the top, or at least a majority of the big boys at the top that are depressing this area of the market. Look at this. It's around a bottom if I can draw it right. Right? Within a broader buy the breakout, where's the volume stop? Around, we'll say 200. 200 is the nice big round number theory. Yeah, hello. Some may call this an Eve pattern. Right, you got Adam and Eve, Eve and Adam. Adam and Adam, Eve and Eve. This may be an Eve and Eve type of pattern, 2 rounded bottoms side by side. That's a real thing, by the way. Don't believe me? Look it up. I'm old school. I know that shit. I don't trade it, but I know it. So this is not bad. Last thing here really quick, and it's the freaking weekend, folks. I'm going to keep drinking my grass water, Shimaho. I like to always kind of take a step back and look at market breadth. I'm not a big market breadth guy, but I've come around to market breadth. One of my favorite traders is a big market breadth guy. And watching him analyze market breadth and take stances over the overall broader market, whether you're defensively positioned or offensively positioned, has inspired me. So if you know who I'm talking about, shout out you. You probably do. Looking really quick at year to date. Let's look at some market breadth stuff really quick. 65%. Well, we don't have the numbers yet, but 65% are trading above their 20-day moving average across the market. 61.66% are trading above their 50-day, and 61%-ish trading above their 200-day. So you have short-term, intermediate-term, and long-term moving averages. Percentage of stocks trading above them. If you were trading an individual stock and it was trading above its short-term, intermediate-term, and long-term moving average, would you be bullish or bearish? God bless you if you're bearish. They're telling you right now, majority of markets in a full-on uptrend above all 3 moving averages that matter. Equally rated Russell 1000. Let's go back to the weekly chart here. Up on the week. The New York Composite Index, up on the week. Folks, it literally doesn't get better than this. It does not. It doesn't. If you're having a super tough time right now differentiating between a bull market and a bear market, it's probably because the stocks you're looking at just got fucking blown up. And you're trying to desperately time a bottom that should not be timed right now. Look at how many things are going up across the market. Expand your horizons. Go buy the stuff that you would have never expected. If you need to rationalize pharmaceutical names, because you're not a pharma guy, right? You're an AI trader, of course. Just remember, they're using AI to revolutionize all these fucking pharmaceutical companies are using AI to rapidly expand their drug base, their product base, everything. That's an AI trade. No one's talking about it. It's all AI. Market breadth is up across the board. Literally every single thing that I use to track market breadth is up. I mean, the only thing that sucks in the market right now is Bitcoin. It's the only thing. And if you haven't seen my passionate speech about Bitcoin, all I'm going to say is the glory days of the 2010s are over. Not saying Bitcoin is down forever, but we're never getting 10,000% cycles again. The institutions doomed that. All right. That's what I got for you. Is that productive? I think it was productive. I think it was good. Any questions you guys want to talk through really quick on Discord? Did we officially get the triple in PayPal or no? Keep writing about it, Josh. There's no problem with that. Looks like some people got the triple. Congrats. What did PayPal close at? Up on the week, 4.9. Who knows? Maybe. Okay. As long as we were able to sell the double, we don't have to worry about news coming out on like Saturday or Sunday where they're going, never mind, Stripe doesn't want to own them because it's already a free trade. So we don't have to worry about it. We're not chasing it. We're already in it. It's good. All right. I'm going to hop off. We're doing churrasco here tonight, folks. We got picanha. We got chorizo. We got linguiça. I bought some Woodford Reserve, which is incredibly expensive down here for whatever reason. Got a couple of cigars, some sticks, right? Gonna have myself a night. Hope you guys enjoy yourself. It was a good week. For those of you in TTI scanner drops on Sunday night. You'll have the link with a full video pre-recorded for you to figure out how to do it. But if you want more in-depth, please watch the Academy from this morning. We go in and use it live. We scan through a bunch of things, chart requests, etc. For those of you not inside of TTI, if you want access to the scanner in our group, you want to take the trades we take and listen to me yap more often, people tend to like it. Not everybody, but they tend to. You can find the link on Substack. And by the way, please subscribe to my Substack. I'm desperate for subscribers. I just started it a week and a half ago. It's fun. Dude, Substack is awesome. Substack is fun to write on. It's so much better than other email platforms. Also, the community over on Substack is infinitely less toxic than Twitter. I love it and I hate it. I like the toxicity on Twitter, but I'm an asshole. But Substack is like more professional and I like it. So, okay, enjoy you guys this weekend. I will yap at you on Sunday. See ya. Sub to everyone. Sub to everyone. Yeah, sub to Josh, sub to Randy. Mike, now we just need to bullet